Guys, these are 5 stocks that super investors own. Stock number 5, owned by 23 super investors, is Visa. Let's pull up Visa. This is a great company, guys. There's no denying that Visa is the absolute best platform for credit cards. They're accepted all over the world. They're an incredible business, right, Mo?
Yeah, it's phenomenal. And how many Visas do you have in your wallet right now?
Yeah, exactly. I have 2. I have 3 credit cards. 2 of them are Visa.
Yep, same.
Right? Exactly. So big market cap, $583 billion with $33 billion in revenue. So the price to sales ratio is very, very high. Now, something I like about Visa, look at this, Mo. Free cash flow is higher than net income. We're showing $19 billion in free cash flow last year versus $18 billion of net income.
We love seeing that.
And we're showing $14.8 billion of free cash flow over the last 5 years on average versus 13.9.
We love seeing that.
We love it. Absolutely love it. Now, of course, this is the scary part. PE and 5-year PE, very high. Now, guys, we absolutely believe for great companies like Visa, and by the way, Visa is one of the companies I want to own in my portfolio for the rest of time, but I want to own it at a reasonable price. Right. Is this a reasonable price?
Maybe.
I don't know. It could be.
Yeah.
You're absolutely right. Like if we knew for sure that Visa was going to double its profit and cash flow every year for the next 10 years.
And it's very reasonable.
I'm selling Mo's soul to buy Visa, right?
I'm selling Paul's. Yeah. There's no soul left in this room.
There's zero soul. Well, some would argue there's no soul in here anyhow. But look at these margins. 80% gross margin. That means every dollar that's brought in, 80 cents of it goes to the bottom line before interest and taxes. That's incredible. And overhead. Profit margin, 54%, 52%. Big time. Now, they pay a dividend, an adorable dividend of 0.7%. It does eat up almost $4 billion of their cash flow. It is, but they can easily afford
it. Yeah.
Absolutely. And look at this return on invested capital. 5-year return, 20.8%. 25% 1 year. Guys, the reason this is important is it justifies a higher multiple. You have a company here that's able to get a good return on the money that's invested in the business, and this has moat status here. Let me ask you a question. What world would we have to live in that Visa goes away in 10 years?
It's going to be very bad. It's probably a world I don't want to live in.
It's 100% a world I don't want to live in. Not because it's Visa. It's like what would have to happen in this world that we would sit there and see a company like Visa go away.
Yeah.
That's the incredible part. All right. Let's check out analyst estimates, Mo. I mean, look at this. $10 this year in earnings per share, growing double digits to $14 in the next 4 years, next 3 years. That's some big growth. Revenue, increasing, double digits every year, according to analysts.
Yeah. And I even think further out than 27 and just think to myself, as the world grows, China, India, Africa, Visa's definitely going to get a footprint there.
Of course.
I mean, think about the potential is endless, really.
Yeah, so you sit there and say, is this like Coke in 1987 when Warren Buffett was buying Coca-Cola at 30 times earnings? Felt expensive.
Yeah.
But if you're a long-term play on this, are you okay with that?
Right.
That's the question you have to ask.
Right.
Guys, that's what makes investing hard. So let's see what investors are owning Visa right now. Guys, these are our super investors right here. And here's their ownership of Visa and their recent activity. So some have added, not many. A lot of them have reduced their shares. Why? Maybe they think it's expensive. Yeah. Maybe they're buying something else. They say, you know what, Visa's getting expensive. I have a lot of exposure. Let me sell some Visa, buy some of the other stuff. So overall, it looks like they're selling.
Berkshire's holding.
Berkshire Hathaway. Where is Berkshire on this list? Right here, Warren Buffett and Berkshire Hathaway. Yep, they kept it. Small percentage of their portfolio, only 0.6%. But look at this, $2.1 billion of their money.
Yep.
That's not bad here. That is not bad at all. And the biggest holder, I don't even know who TCI Fund Management is, but 12% of their portfolio is in Visa. My guess is they started this position very early on and it has just grown and grown and grown. So major kudos to Chris Hone at TCI Fund Management, because I look at that saying, you bought a great company early and you're just riding it out. That's awesome. So guys, what's Visa worth to us? So let's still pull up our stock analyzer tool. And we've done Visa in the past. This is my previous Visa analysis here. I did a 10-year analysis. Mo, I did 5, 8, and 13% revenue growth. Profit margin, I did 48, 50, and 53. Free cash flow, since it's higher, I went with a higher free cash flow. The historical numbers are definitely higher, 50, 54, and 58. The question is, what PE, Mo? What price to free cash flow and what earnings multiple do you want to pay for? Is 18 too low? Is 21 too low? Is 24 too low? Yeah. I would argue they might be too low.
So I actually put 20, 23, and 26. I think starting at 20 is a good number. I mean,
and this is what makes investing hard, and this is what makes this tool so valuable to our users on the community, is because you just got to sit here and decide for yourself. What are you willing to pay for a great company like this? I'm actually worried this might be too low.
Yeah.
But for desired return, I used to do 9, 11, and 13. I'm actually going to I want to see what's the company worth if I get a market return of 9% in all of these assumptions. I hit the analyze button. The company's currently at 285. So low side, 155 to 160. High side makes a lot of sense.
Yeah.
Middle side, 228 to 244. And again, this is assuming no margin of safety. This 9% is a 9% market return. So you have to decide for yourself what's the appropriate price. I have in my watch list for under $220 per share. If it never hits, I never own it. And as time goes on and the company gets better and better, my watch list price will increase. Stock number 4, Amazon, owned by 24 investors. Now, Amazon, guys, $1.86 trillion company. But here's something interesting on Amazon, Mo. 5 years, it's up 113%. But if you go back to this point right here, this is August of 2020. August of 2020, 3.5 years ago. The high was 175. Look where we're at today.
Wow.
So this killer, just like the Tesla thing, when people start looking at the long term, like the shorter term of this, it's gone nowhere.
Right.
And in fact, it hit a low in December of 2022, which is the low of that NASDAQ, of $82 per share. It has over doubled for those of you who had the balls to go buy this company at $81 a share, somewhere near that. Incredible. Amazon's the everything company. They do everything. Incredible. Jeff Bezos is an incredible business mind. What I love about Jeff Bezos also, I watched this interview with him, and he says, you know what? Everybody's always trying to figure out what's going to change in the next 10 years. All I'm trying to figure out is what isn't going to change in 10 years, and I focus on that. And when I heard that, I was like...
It's like genius.
It's brilliant.
Yeah, it's so simple.
It's so simple, and everybody's focused on what will change. He's like, listen, people are going to want cheaper and faster. That's all I know. Yeah. They're never going to not want cheaper and faster.
Right.
So I'm going to focus on cheaper and faster.
Something else I saw an interview with him, and he was like obsessed with customer experience.
Yeah.
Obsessed. And I think that's awesome.
But guys, the issue I have with Amazon, now, I'm not going to lie to you, Amazon's a tough one for me because Amazon isn't even on my list of 30-some stocks I want to own because I don't understand the financials. There's a lot of valid arguments to be made that this gross margin and this profit margin is very misleading. Now, the company with $575 billion in revenue, it's hard to think that the numbers would be misleading, but that's what they're saying. Free cash flow, $32 billion last year versus a net income of 30, which is great.
Good.
But then you go to the 5-year average free cash flow, 9.6 versus 5-year average net income of 18.8. Now,
spend a lot though.
Well, yeah, but it's about so the question I have is they're investing a lot of money in their process, in their capital improvement. That's where the disconnect is here. Yep. So for those who get scared by this, their capital expenditures, which means their investment in the company and their fixed asset, let's go look at the cash flow statement and look at how much it's jumped. This company is investing so much money into themselves. Right here, change in capital expenditures. Again, this is where they build buildings, warehouses, all these things they need to do to make this a better company for you. Look at the jumps. 7.8, 12, 13.4, 16.7, 40, 61, 64, 53. So guys,
they're a $2 trillion company that operates like a $2 billion company. It's so awesome. I love it.
Guys, this is a company that's investing in itself. And I hate to say it, but you can't focus on the free cash flow here. Yeah. You got to focus on, but again, that gross margin of 13%, a lot of people say it's misleading. Very well could be. But I look at this saying, I still don't understand how a company that is valued at $1.86 trillion generates $32 billion in free cash flow. Double it, triple it. It's just like, even at triple for a $2 trillion company, it's still 17, 18, 19 times free cash flow if you triple the free cash flow. So I don't know. This is a tough one for me. But let's go take a look at analyst estimates. $3.69 a share. Mo, look at this. Oof. to $9.25 per share.
Some of the biggest I've seen.
Guys, you gotta, if you believe this, you gotta pay a premium for this company. You gotta absolutely accept the fact that these guys are gonna grow their earnings and probably their free cash flow by these numbers, maybe even more on the free cash flow since they've been spending so much on capital expenditures. You gotta pay more for that. Because look at the revenue growth.
First time I've ever seen it.
Double digit.
$1 trillion in revenue. First time I've ever seen it.
Wow, you're right.
Yeah.
$1 trillion estimate in 2028. The everything company, right? So let's see what which investors own it. You'll see right here, look at this. John Armitage at an 826% increased his position by 826%. Okay, somebody's going big time in it. But it's only 7.65% of their portfolio. I would hope that Josh here over at Greenlee Lane Capital, 22.8%, reduced by 11.5%. Maybe he's owned it for a while. I don't know. Michael Burry, look at this. He bought.
New addition.
Warren Buffett down here, 0.44% of the portfolio, 10 million shares, $1.5 billion. So guys, a lot of people out there, a lot of people. And I want to show you, look how diversified this group is. You know, everybody sees different value in different places. So you got to remember that when going through it. So let's go see what this company actually is worth based on our stock analyzer tool. So I'm going to pull it up here, pull up the history, AMZN. We did it on February 14th. Now, Mo, I did 4, 7, and 10% revenue growth. And the 7% is lower than what the estimates were, but I also went 10 years and not just 4 or 5 years for Amazon. Profit margin, I did much higher profit margin and free cash flow. Right, Mo?
Yep.
Because we sat there and said, listen,
yeah,
it's going to start just really spitting out
Absolutely.
cash. I'm giving them the benefit of the doubt. PE, I did 17, 21, and 25.
Tough one.
Yeah, again, another tough one.
I did 20, 23, and 26. I mean, it's kind of a moat. Even though it's not really. It's just shopping, but it's amazing.
I don't
do everything.
Visa is just credit card transactions.
That's the thing. Like, Visa to me is not a moat, but it's a moat.
No, it's a moat.
You know what I mean?
It's a moat.
Like,
just because, listen,
because there's competitors doesn't mean.
Yeah, there's still if I told you go buy something, we're the first place you're going to check it out.
Amazon.
100%.
Yeah.
Now, I will say this. When I want to watch TV, the last place I go is Amazon Prime.
Yeah.
I do not watch Amazon Prime Video as my go-to.
I'd pretty much rather watch a black screen than Amazon Prime Video.
But they paid for football.
Yeah, that's true.
They're being aggressive in that area, so that could lead to a lot of money down the road. I think personally, guys, this is the hardest part of the stock analyzer tool. What PE and price of free cash flow do you think is appropriate for this company in the future? That's the hardest part. I put 17, 21, and 25. You probably disagree with me. And if you do, that's awesome. Tell me why below, because I really want to understand people. And again, we did the 9% desired return. Market return, 9 to 10%. No margin of safety. We hit the analyze button. Middle price of 67, high price of 340, middle price of 166. I think I need to readjust my watch list because I had it at 75 before.
It's gotten better.
Yeah, it's gotten way better. So I think I'm going to add it at 100 because I still went much higher on their profit margin. So now it's going to notify me at $100. Guys, stock number 3, Meta with 25 investors. If we look at Meta, a lot of great attributes here. $1.3 trillion company, very great balance sheet, very little debt. Mo, free cash flow is growing even with this Meta investment that costs them like $10 billion. Isn't that incredible, Mo? Yeah. And they say it's going to increase. They say it's going to go higher than $10 billion. Yeah. So this cash flow net income is after losing $10 billion on Meta.
And if it starts to work, why would you not put more than $10 billion?
Yeah, I think they just hit $1 billion in revenue for the metaverse, which was way higher. I think it was several times higher than it originally started. So they're making a lot of progress there. They have their Vision Pro competitor.
Was the #1 downloaded app in the App Store for 3 Christmases in a row this past Christmas.
And that was for theirs?
For the Meta Quest.
Wow.
Yeah, 3 Christmases in a row.
I'm a big believer that Meta has a big future, just like I believe that AI has a big future. The question is, can you pay too much for that?
Yep.
So some great stuff here. Look at this profit margin, Mo. They have better than Visa gross margin of 80.8%. Profit margin of 29%. Now, one problem with Meta is it's a problem and a benefit. They have a lot of potential growth in the average revenue per user internationally. Mm-hmm. But right now, that average revenue per user in the US is like $42 a person per year, but internationally it's like $5 or $6.
Yeah.
So they've pretty much maxed out what they're going to generate
States,
here.
yeah.
But if you're a long-term player in this company, as the world gets wealthier and wealthier,
It gets computers.
yes,
You know?
that's exactly it. What's going to happen to the revenue coming in for Meta? Guys, they have WhatsApp, they have Instagram, they have Facebook. 3.5 billion people use their platforms every single month actively.
Insane.
So, high returns on invested capital, 16%. Let's look at the 8 pillars. We haven't done that here on a few of these companies. Look at this, Mo. Everything's a check mark. Makes a lot of sense. Except for these shares outstanding. I hope they were buying them at the right time. They did announce a share repurchase when the stock was falling below 150, which I loved. They were buying the stock back when the stock was cheap.
Remember they're going to start paying a dividend?
Oh, that's right, the dividend.
Forgot about that.
The dividend.
Yeah.
Meta, what are you doing? Now, by the way, it very well could be okay based on the fact that they don't want to make acquisitions.
That's true.
They generate a lot of cash. It could be okay.
Dump more into the metaverse.
But then it hurts their financials.
Wow.
I don't know. So let's check out the analyst estimates and see what they're estimating here. $18 a share this year, going to $30 a share in profit in 2028. That's double-digit growth. Let's look at the revenue estimates. High single digits, low double-digit growth, 155 billion to 225. Guys, this company's gonna be around for a long time, I think. You know, this isn't MySpace. I got a chuckle for that. By the way, how many of our viewers don't even know what MySpace is?
A lot.
Who are the super investors who own Meta? These are the Metas. Oh, wow. A lot of reductions, Mo.
Oh, yeah.
Wow. A lot of reductions. Are people taking their profits here?
Seems like it.
Who is the biggest reduction? 26.27, 30.48 by, Ruane, Sequoia Fund. Interesting. 47% reduction here by Lee Ainsley at Maverick Capital.
Now where was that? 19.05% reduction by Christopher Davis. That's
Chris Davis.
Yeah, Chris Davis from board of Microsoft, right?
I don't know if he's on the board of Microsoft. Is he?
Was something I can't remember.
Yeah, but he's a very well-known value
very well-known
investor.
guy.
Interesting. So not many ads. That's interesting. Look at that. 1, 2, 3, 4.
And the ads were very small.
3 people just kept their, we're fine.
Yeah.
All right.
Interesting.
These are pretty interesting things, guys. All right, so what's the stock worth? Let's find out. I did 10-year analysis. Again, maybe my revenue growth is low, 4, 7, and 10%. Profit margin, 24, 28, 32. Same with the free cash flow. I signed a PE of 17, 20, and 23. Same with the price of free cash flow. And I did the 9% intrinsic value market return. Hit the analyze button. So, guys, this is how insane it was when the stock was $88.
Yeah.
217 on the low side, 560 on the high side, 350 in the middle. I mean, this is assuming no margin of safety. Take it for what you will. Stock number 2, Microsoft, with 31 investors. This stock is hitting all-time highs, 409.95, hit an all-time high just recently of 420.82. $3 trillion company, most valuable company in the world, surpassed Apple. I always tell the story in 2011 and 12 when that tech CEO told me that Microsoft was dead and nobody buys Microsoft. When I was like, it's selling for 9 times earnings with growing revenue and growing profit. He said, it's a dead company, Paul. And he was like literally a dick about it, to be honest. He was just like, you're dumb. You don't get tech. I'm like, okay. But again, I bought it, high teens, low 20s, and sold it at 60 like an idiot. So I should be shot for this stuff. Great margins, 36%, 35%. Free cash flow is wonderful. In fact, let's see their free cash flow app. So here's something interesting. Free cash flow is a little bit lacking to net income. That's interesting.
It is interesting.
Dividend, adorable, 0.7%. But look at how much that 0.7% pays out.
0.7% pays out almost $21 billion.
$21 billion.
That's crazy.
You know, I don't know how much Bill Gates owns. I think we're going to see it in our super investor thing. But let's say Bill Gates owns 5% of the company. He's getting $1 billion per year in dividends. I think he owns more than 5% of the company, but you get my point. All right, so let's check out the 8 pillars. It's probably going to look very similar to Meta. It does. These 2 valuation metrics. Is this too high or too low?
Dang.
Guys, I know Google Drive is awesome for a lot of people, but
Microsoft Office is the gold standard. It really is.
Yep, so they're doing great with that. High returns on invested capital. So let's see what analyst estimates are. $11.50 per share here, going to 1982. Double-digit growth. Isn't it amazing you can get double-digit profit growth on a company that's so large?
Yeah. I mean, it's a $3.06 trillion market cap.
I joke with us upstairs. I say, listen, as a company overall, if we can increase our profit by double digits every year, we're going to be a great company.
And so can they.
Yeah. They're a $3 trillion company. I'm not even a $300 million company. I mean, we're a $30 million company in revenue.
amazing.
You know what I mean? It's crazy. It's just
amazing.
They're incredible.
Yeah.
The revenue growth, again, double digits. I mean, unbelievable, guys. Unbelievable company. I think as they get more and more out there, their gross margin being so high, they're going to keep building on that profit, and their profit margin will continue to increase. So let's see who owns this company. And as Mo said, Bill and Melinda Gates Foundation, 34% of their portfolio, it's $14.4 billion.
They reduced?
They reduced by 2.74. My guess is they reduced to go give their donations and things like that. But a lot of reductions here, Mo.
A lot.
John Armitage added 32%. Poland Capital added 39%. Ooh, Thomas Russo added 144%. But look how small.
Yeah, it's small portfolio.
0.02% of his portfolio. Why even have it, bro? Maybe he started buying that day.
Maybe.
Ironically here, I don't see any Berkshire Hathaway. Do you think he doesn't own it because they don't want to be accused of having inside information?
Maybe.
Probably just sits there and says, I'm not going to own it for that reason.
Yeah.
I don't know. I'm speculating here purely.
Yeah.
So what's the company worth to us? Let's check it out. Let's go to our stock analyzer tool. Okay, 6, 9, and 12% revenue growth. Guys, I think you see I'm doing something consistent. I'm not assuming the big revenue growth numbers because we're also going out longer on the years of analysis. We did 10 years. Analysts are doing 4 or 5. I did 32, 34, and 36. And again, I do believe these numbers can go higher because their gross margin is high and they don't need to add. If they want to double their sales, they don't have to double their overhead. That's the big key there. So if you don't have to double your overhead to double sales, you can really drive your profit margin and free cash flow margin a lot higher up. And that's really important. PE, 17, 20, 23. Mo, anything here that you look at and say, Paul, I just don't agree with you?
I'd probably go higher on the PE.
Really?
Yeah. I'm going to go 20, 23, 26. Actually, I think every single one of these that we've done today, I've done that just because they're all that good.
Yeah, it's funny. You look at the channel when we started, and I was trying to find special situations and things like that. And now I've changed my viewpoint to find great companies I can buy for great prices that I can own for a long period of time. And if they ever get cheap enough, they buy back shares, but I'm willing to pay that premium. And again, 9% desired return. Hit the analyze button. The stock's at 409. Yeah. 176 to 201, 420 to 444, 275 to 300. I have my watch list at 250 for my margin of safety. Yeah, this is, again, there's no margin of safety here.
Right.
Now, guys, before we get into our last company, the number one owned company by these super investors, our software, our community is a game changer. We've had over 16,000 people sign up for the software in our history. The community has thousands of daily active users who sit there and use it to discuss. And that's not all. We have so much more that we offer our users. Guys, with our software, you get the mobile app, everything you see here on your phone. You get the 8 pillars. You get over 30 years of financial data. You get that stock analyzer tool that we've done every single company so far. You get exclusive content that you only get as a community member. You get access to Mo and I. You can message us in the chat. We respond to a lot of people. You get news. You get the 8-pillar portfolio, which means you can put your own companies, up to 500 companies in, and see how it looks overall as an 8-pillar perspective. So you put all these companies in and say, if they were one company, how would they look? You get retirement calculator, which I still use every 2 weeks. But most importantly, you have that like-minded community. You have the community of investors. All of these are available because investing is a lonely road. It's so rewarding to get feedback from other people, like-minded people, not just somebody who says, the stock's up a lot, I'm buying it. All of this, guys, all of these things available for $49 a month. That's it. Look at our competitors. They're all almost all of them are more expensive, and they don't give you what we give. So, guys, we have a special, though, before the $49 a month. We have a special, $7 for 7 days. Go try it out. That's all it's going to cost you is $7, $1 a day to try out the software and change the way in which you look at money. So our final company, company number 1, drum roll please. The Googly Moogly. Google is the number 1 owned company by the super investors. Now, guys.
Owned by 33.
Google is a company that's up to $141 a share. Its all-time high is $155 just in January. But there was a time when it was $150, and we were telling people we were interested in it at that time below 100, and people in the comments were like, it'll never hit below 100. It'll never. You guys are stupid.
They were so mean.
They were kind of mean. It kind of hurt my feelings. The low in December of 2022, $86.37. Guys, I don't say this to say we were right at all. What I would say it to say is anything can happen.
Plus, this is just how it works.
This is how it works. Markets go up and down. And guess what? When Google was here, people were criticizing the hell out of Google. Google was back to here. Google's back, baby. At the end of the day, really, there's no difference between Google here and Google here. In our opinion, it's been 15 months. What it takes to change a $1.8 trillion company, just like Meta was at $88 a share, and now it's at $438 or whatever it's at. They're the same company. But at $88 a share, the news changed because news follows the stock price, not the other way around. Just keep that in mind. Google's a wonderful company. Another one of the companies that I have on my list of companies I want to own forever. It's got a 57% gross margin. It's got 24% very consistently to the bottom line. A little bit trailing on the free cash flow versus net income, but not enough to make me worry. We're talking about 6, 7, 8% difference. Good thing, no dividend. A growing return on invested capital. And guys, this is Google. They're the world's search engine. You don't say Bing it. No. You say Google it.
DuckDuckGo it.
DuckDuckGo. I remember there was those billboards on the side of the freeway, and I'm like, what the hell is DuckDuckGo? And I asked you, and you're like, oh, it's the search engine for Safari or something. I don't even know. Is it owned by Apple? It's not owned by Apple.
I don't think it is.
So let's see what analysts are saying about the Googly Moogly. $6.88 a share this year, going to $13.14, almost doubling. Double-digit growth. Guys, look at all these companies. All have double-digit growth, earnings per share potential. Revenue growth, almost double digits for the next 5 years. Big stuff here, guys. Big stuff. So, what super investors own Google? All right, guys. Lilu, consider the Warren Buffett of the East of Asia. 17% of his portfolio. I'm sure he has a low-cost basis on that bad boy. Kept his position the same. Again, a lot of people reducing their position sizes.
My friend Guy Spear owns about 1% of his portfolio.
Where's Guy over here? Oh, right here. Aquamarine Capital. Boom. Yes, shout out to our channel friend, Guy Spear. We love Guy. Here's your boy, Chris Davis, right there.
Michael Burry bought.
Where's Michael? Oh, yeah, he did start a position there.
Bill Ackman with Pershing Capital.
Yeah, these are pretty interesting positions. So, guys, and again, Royan right here, Sequoia Fund. They reduced a little bit. Not a ton, though. So, guys, you see all these super investors, they own big chunks of these companies. That's a big number. Google's a great company with a lot of great potential. So let's check out further on Google, and let's just figure out what we want to pay for the stock. So we're going to go to history, and I'm sure, Mo, you're going to change the PE.
Yes.
And the price of free cash flow. I did 5, 8, 11% revenue growth, profit margin 22, 24, 26, just like free cash flow. I did 18, 22, and 25 for the PE and price of free cash flow. And again, 9% desired return. Mo, besides the PE and price of free cash flow, what do you disagree with here? That's it. So again, our multiples are different. Just like everything else, hit the analyze button. And guys, remember, everythingmoney.com, $7 for 7 days for all this software. Go check it out. Boom. 106 on the low side, 250 on the high side, 168 in the middle. Guys, it's close to my watch list price of 140. It's at 141. Thank you very much for your time.